Rahul Arora, market expert, with us this morning. Rahul, you're watching the markets or you're watching Bihar elections?
A bit of both, actually. I think it looks like the Bihar election is heading towards an early verdict from what I last saw. I think the NDA alliance is 30 short of the majority mark. But let's see. Let's not count our chickens before they hatch. But it looks like it's going to be an NDA-led victory, which I think the market will digest. I think you were talking about the earnings. I think net of everything, the market is digested pretty much every piece of good news. I think if you do get an NDA-led alliance in Bihar, I think you could have a day where the Nifty gives you about 100, 150, by the end of closing, maybe even 200. But I don't see it making a new high or even sustaining a new high, even if it touches them.
In the past, Rahul, and good morning to you, you've spoken about earnings. I wonder, now that we've come to the culmination of this season, have you revised upwards any of your expectations? Because in a few pockets in particular, you've had managements come out and say pretty confidently that they expect H2 to be even better than H1.
So first off, apologies. I did not thank you for inviting me on the show. So good morning and thank you for that. But yeah, I think, I still don't think we're in an earnings upgrade cycle. I don't think we're anywhere close to that. And I think that's been the story in India for a while. I may be a minority voice on your channel, but on the last couple of appearances that I made, including Diwali, I said that I don't see the market making a new high or even sustaining if it does. And that's partly because the static, or should I say no change or downgrades, is far more than the upgrades. Now, you can break it down sector by sector. A little while back, Tamanna was mentioning about QSR players, defense players, durables and electricals players. Now, if you see all these three particular sectors, there are pressure points across the board. I mean, the durables and electrical sector has been washed out completely. If there are some indications of an early onset of winter, if that happens, that this quarter will not be that great as well. Defense has become an H2 story, much like cement always has been in India. So I don't know how much of that is going to come through, Alex, because I think if you look at the valuations, even in defense, are all trading between 45 to 55. Durables and electronics are all trading between 45 to 55. The other stock Tamanna mentioned was Muthoot. That's trading at nearly 3 times price to book. So the point I'm trying to make is, if you enter, some of these market fancied stocks today at these valuations, what's your exit multiple? Your exit multiple, if it's an illiquid stock, needs to be at least 25-30% higher to adjust for impact cost. Otherwise, even if it's a liquid stock, at least 15%. I mean, what kind of valuations are we talking? The only thing I think that can make a bit of a play is conventional banking, because even though valuations optically are expensive for the large cap private sector banks, around 2.5 to 2.8 times, they're nowhere close to the historical highs they had been before we went into the lockdown. So I think that could be an interesting play. So BFSI would probably be my largest overweight, followed by, to some extent, consumer discretionary, and maybe selectively autos would be my third bucket.
Rahul, sorry, but just trying to understand, as of Monday, as per the math, the BSE 500 earnings growth was nearly 15.5%, right? Why do you say that the smattering of downgrades is more higher and otherwise there is a static? I would reckon that there will be more upgrades as opposed to downgrades. The PAT growth and the EBITDA growth has been much higher than anticipated.
No, so I think there are two things here, Neeraj. When I talk about downgrades versus upgrades, I'm not talking about relative to the absolute performance growth that they have given. It's basis the expectations people had going into the result season. So I think if you compare them to, street estimates, both, broad sell side Bloomberg estimates, they have, by and large, I think it's, if I'm not mistaken, about 55-58% of the stocks have come in below expectations. The other point that you make about the 15% earnings growth, Neeraj, a lot of this is coming off a very low base. Let's not forget. Let's take Jubilant Foodworks, for example, since your colleague brought that up. You had a fairly okay 7-8% growth like for like on a year-on-year basis. But what's that growth come on? A 1% SSG? So, it's not like you've had a very strong base quarter and on that you've shown it. So let me just, very quickly in 30 seconds try and break it down to you. IT services is not going to grow its PAT by more than 8 to 10%. Consumer companies, you have seen the growth, whether it's a Lever, Britannia, Colgate had an 8% degrowth. Volume growth is a challenge in consumer staples. So they probably won't even hit a double-digit earnings growth. The last couple of weeks, if you look at the sectoral deployment of credit, that number has grown into the double digits at 11.5%. but that's also been driven predominantly by gold. So if you strip out gold, credit growth will probably be in the single digits yet again. So you have a situation where banking earning growth will be about 12-13%. And then the fourth large pillar of the market is Reliance. So these four, IT, FMCG, banks, and Reliance make up about 75% of the index. Again, I don't think Reliance is in a place where it's probably going to grow its earnings by more than 13, 14, 15%. So when 75% of your market is going to grow its earnings between 8 to 15%, you're talking about a blended earnings growth of what, 11.5, 12%. Now, on that basis, if you want to ascribe a 21, 22 times multiple to the market, good luck. I personally don't see these valuations sustaining, but I could go horribly wrong because liquidity is sustaining. The important part, Neeraj, is that if you look at the incremental flow into mutual funds last month, it is down quite remarkably month on month. And that's the first time this has happened in recent memory where you've had such a large degrowth in the quantum of inflows on a month-on-month basis. So
Rahul,
if you actually look